Welcome to our latest edition of Apex 30-Minute Thursday. I'm Ann Weirheim, Practice Director here at Apex, and I'm glad to introduce our latest presentation, which is the Apex 30-Minute Thursday Netting with AP and AR. It's going to be presented today by Rodney Pitt. Just a bit of housekeeping. I'm going to just do a really brief a brief overview of our company, Apex, and then I'll go into introductions, and Rodney will do his presentation today. So just a quick snapshot, just a little bit about Apex. We're a division of ASGN, Inc., serving 300 of the Fortune 500 in all major industries. Our solutions are highly scalable and deliverable nationally with over 180 unique IT skill sets in over 70 branch locations across the US, Europe, Mexico, and India. Specifically, our Infor practice has experience in more than just healthcare to serve many Infor clients, as well as those using Epic, Cerner, and Kronos. As the second largest IT staffing and service provider, we can fill just about any role. Without going into all 18 areas of our solution offerings here at Apex, our consulting practice offers global solutions per industry through digital innovations like Infor, Epic, and Agile, workforce mobilization through staffing to support any size implementation, in our modern enterprise solutions cover migrations to standing up a PMO and running it for you. Most of all, our Infor practice works with clients beyond the cloud, offering the right services at the right time. Before the project, our advisory services guide the client through the selection process, assess organizational readiness through process review and design. We offer total program governance and change management services to start clients off on the right foot on their implementation. During the project, we offer prescriptive guidance to reduce risk, duration, and cost. After the project, managed services helps clients to sustain their investment through on-demand service, staff augmentation, and incident support to be your partner before, during, and after the project. I'll turn it over to Rodney now to do a quick introduction and continue with our presentation. Thank you, Rodney.
My name is Rodney Pitt. I am a solutions architect at Apex. I started off my career in Lawson as a client way back in version 7. I then moved into consulting. I then moved back to a client where I upgraded to version 8, then 9, then 10, and then I've been back in consulting doing Cloud Suite for the last number of years. The agenda for today, I'm going to give you an overview of what netting is, and then how to actually set netting up in Cloud Suite. We're going to look at all of the potential business scenarios you can use netting for. Then I'm going to show you how to actually run the jobs in Cloud Suite to net from AP to AR and vice versa. And then we'll take a look at some of the T accounts. What is netting? When you have a vendor and a customer that are the same entity, you can net the amount owed with the amount to be received. You have to have the AP module, and you have to have the AR module, and you have to link the vendor and the customer record. When you do this, this system automatically detects a customer balance or a vendor balance or both, and then sends the transactions over to the other side. A very simple example is if you have an AP invoice for $100 and an AR invoice for $100, well, what you would normally do is you would do a check run in AP and you would pay that vendor. And then in AR, you would wait for the customer to pay. You would wait for the payment to come in. But in theory, these two just wash each other out. So from a like netting perspective, you can just net these together. Netting is really the sum of all AP invoices and credit memos plus AR invoices and credit memos plus AR payments. And the system automatically detects this. When it actually does the like netting to the other side, you can either do it in detail or summary. And the way it actually works is on the AP side, if there's an invoice, it creates a credit memo to offset that, and vice versa. If there's a credit memo, it creates an invoice. On the AR side, if you have an invoice or a payment, it just does a like write-off adjustment, and then it sends it to the other side. How do we get this set up in Cloud Suite? On the AP Company, on the Options tab, there is a checkbox interface to receivables. That needs to be checked. You can also default in whether you want to do it in detail or summarized, although you can override that at a later stage. When it automatically creates the netting invoices, you can put a prefix in front of your invoice for your naming convention. So you have to head it up on the AP Company, and then you also have to head it up on the AR Company. On the Apply tab, there's a checkbox interface to payables, and then again, you can decide whether you want to do it in detail or summary. You have to have a vendor and a customer, and they need to be linked. The way they're linked is you can do it on either the vendor record or the customer record. On the main tab on the vendor record, if you scroll all the way down, you put in your customer group, and then we are linking vendor 1004 to customer 103. You only need to do this once. If you do it on the vendor side, it automatically shows on the customer side. You can also do it from the customer on the main tab, where you just put in your vendor group and then you link it through to the vendor. What's important is this net. Once you've linked them, this net balance hyperlink shows up. Another setup, the AR, you need a reason code, and we'll take a look at the accounting later, but this drives the accounting that happens behind the scenes. In this case, I'm just using a clearing account, and you actually have to put in a reason code to drive the accounting when we net from AR to AP. When you do from AP to AR, it allows you to enter in the accounting on the fly. Netting scenario. So why would we use netting? There's many different scenarios. Normally this functionality is not introduced at go live. It's something that comes later when you're really starting to optimize your business processes. So scenario number one is if we start off with the black numbers, so we have an AP invoice for 100 and an AR invoice for 100. So therefore, we have a vendor balance of 100 and a customer balance for 100. Remember, we said the net is calculated on AP plus AR, so the net is 0 before we start. So what happens here is if we decide we don't want to do an AP check run and we don't want to wait for the AR payment, we can just net the two together. You can use either the AP to AR job or the AR to AP job. So what will happen here, and sorry, this number's wrong here. There would be an AP invoice for $100, then it would automatically be offset with a credit memo of 100. That's 100, and then the AR invoice is adjusted and written off, and the end result is the vendor after balance is 0, 0, and the net is 0, 0. So that's a washout. So a couple other scenarios. Let's say we just have an AP invoice for $100 and we don't want to do a check run and we just want to park it off in AR. We could net AP to AR, and this just creates a $100 credit memo on the AR side. The other way around, if we've got a credit memo on the AP side, we can create a $100 AR invoice. That's the business scenario. So maybe we don't want to do a check run. We can use scenario number 2. Scenario number 3, you cannot actually pay a credit memo in AP. You can't cut a negative check. So maybe we just send it over to AR. Now, if we go over to the AR side, we have $100. Whoops. We have a $100 AR invoice. Let's just say the customer doesn't want to pay, and so we just going to send it over to AP as a credit. So we just net AR to AP, and this gets written off, and it creates a $100 credit memo in AP. This is a common one. Scenario number 5, we have a credit memo in AR. Say there's some, if you're using the PS module, there's a retainer refund, and it creates a credit memo. Well, we could just hand it over to AP. Scenario number 6 is very common. Sometimes AR overpays. There's an overpayment. And so probably the best way to resolve this is to just send the refund over to AP and send them a check. So there's an AR payment for $100. It then creates, you net it over, and it creates a $100 invoice in AP. Scenario number 7 is you can have all of the above. You can have all sorts of combinations. So here's one where we have a $100 AP invoice, a $600. We got a credit memo as well, and then on the AR side, there's a $100 invoice and a $300 credit memo, and there's a payment as well. You can use either of the netting programs, AP to AR or AR to PO, and it does the maths. It adds all of these numbers up, and it comes up with the amount, and it will create a 350 AP invoice. So many different potential business scenarios. Some of them may not make sense to all companies to use, but lots of flexibility here. So in order to do this, you've been doing all of your AP and AR transactions, and they're all laying out there. You go to the vendor record and you click the net balance, and you can either do it from the vendor or the customer, and it pulls up the record and it says, oh, okay, in this particular example, we have a net balance of 13,150 vendor balance, and then of course it's the inverse on the customer. It's a negative, so it tells you what you have out there to net. The next step after that is, if we netting from AP to AR, from the payables manager role, there's a menu option called payables and receivables netting. You've probably seen it but not used it before. We enter in our company number, we choose payables to receivables, and we put in our post date and the invoice date. Hence it's going over to AR, it's creating a credit memo in AR. We have to have a memo reason code. Our process level drives all of the cash codes, and we put in a payment term. And then this is where you get to choose your accounting. We're just going to be using a clearing account. It's useful to put in a description. It puts that on the invoices, and then we press submit. It does the maths, it calculates everything, it creates the AP credit memo or debit memo behind the scenes, and it creates the AR adjustments behind the scenes. It does everything for you, and you hit submit and it's done. If we're going from AR to AP, the same thing. On the receivables manager role, additional actions, receivable and payables interface. There's a screen here. You enter in your customer number. It automatically is linked to this vendor. You may have multiple companies. It does the maths for you. It adds everything up. It tells you what it's going to do. You choose that record. It then opens up a screen. So on the AR side, there's a tab for receivables. It will show all of the receivables, invoices, and credit memos. So you choose which ones you want. In this case, I've chosen an invoice and a credit memo. It shows payments. In this case, I've chosen just one payments. I've selected everything, and then you press, you can either interface it over to payables as a released invoice or an unreleased invoice. In this case, yeah, we're going to net it over as released. It does all the maths for you and nets it over. This is the job. This is that reason code that you have to have an AR to drive the accounting. The process level, you might have multiple process levels, but this drives all of the cash code and accrual code, so you don't need to override that. You put in a description, and you put in a post date, and you press submit, and it does everything for you. T accounts, if the accountants are on the call, they love to see how the accounting works. So if we are netting from AP to AR, so let's just say we have a test transaction out there. We have an AP invoice, so the accounting is the debit expense and credit trade. We then go and run our netting job, AP to AR, and what this is going to do is it's going to create an AP credit memo to offset this AP invoice. So the normal accounting for credit memo on the invoice, inverse of an invoice. So we're going to debit AP trade, But when we run the job, we're going to select a clearing account. So this would normally be the expense account. So it selects a clearing account. And then the system automatically on the AR side creates an AR credit memo, the normal accounting. So what the accounting would be, it would debit the clearing account and it would credit the AR trade. So the net effect of all of this, getting rid of the AP invoice and creating an AR credit memo, is there's a move from the AP trade account to the AR trade account. The clearing account gets washed out. Now, the similar thing happens when we're going, except the exact opposite, when we're going from AR to AP. Here's our test transaction. We just have an AR invoice. The normal accounting is debit trade, credit revenue. We then run our netting job, and when this AR invoice is written off, there's a write-off, an application adjustment. It does the normal accounting for write-off, where it credits the trade account, but it uses the clearing account. And then the system automatically creates the AP credit memo invoice, normal accounting, debit trade, but it uses the clearing account. So the clearing account gets washed out, and the net effect on this is a move from the trade AR to the trade AP. And that concludes my presentation. So in summary, what we have done today is we've explained what netting is, how to set netting up, how to run the jobs, and reviewed the accounting. So I hope you can potentially leverage this functionality. It's very easy to use, and it does all the work for you. So thank you for your time today. Hope you enjoyed it.
Thank you, Rodney.